Hello forex traders, you're welcome back. This is Carrie's Trading Institute and this is the weekend commentary for the dollar and foreign currency. And as usual, we'd like to first of all get to understand what's coming up on the fundamental basics. So we'll be looking at the economic calendar to scout out for high and medium impact news events, and we're going to be taking note of the day the event is going to come up, the time the event is going to come up, and the type of events coming up in the marketplace. You should also take note that this week we are anticipating the non-farm payroll news events coming up on Friday. Usually it's every first Friday of the month. You should anticipate non-farm payroll news event. It's a high impact news event that you may not want to be trading, especially if you're not an expert trader. You should avoid trading non-farm payroll, CPIs, FOMCs. Those are news events you shouldn't be caught up in the marketplace, especially when you are in the wrong direction of the market. Okay, so on Monday you can just see that we have very little high and medium impact news events coming up on Monday. We only have one high impact coming up and about 3 medium impacts coming up. So you take note of the time, the day, the type of event, high or medium, and the assets that news is going to have an impact on. Right, guys, so just go through Monday through Friday. Take note of the time. Usually we expect speed in price delivery at the time that the news is going to be released. We're going to see the impact on the assets that we are trading. All right, so let's quickly go to the dollar index. We want to start our analysis with the dollar index because the dollar is the benchmark asset for all dollar associated pairs. So we'd like to know what the dollar is doing and simply apply the opposite on foreign currencies, though it depends on what you are trading and depends on the type of market relationship the dollar has with the assets you are trading. If you are trading a foreign currency, the likes of GBPUSD, Euro USD, NZD USD, AUD USD, they have an opposite relationship with the dollar. Whatever is happening on the dollar, we like to see the opposite being affected on those foreign assets. Okay, so if you are trading a USD card, you like to see that pair go in line with the dollar because they have a direct relationship with the dollar. All right, guys, so last week, this is the daily time frame. We like to do institutional order flow of the higher time frame, monthly, weekly, and the daily time frame because the higher time frames are the main drivers of liquidity. You could remember last week I gave you an analysis and I mentioned that we like to see the dollar trading to this bearish mitigation block because that is an institutional reference point that institutions would like to pay attention to, especially because this is very important in their order of importance. The mitigation block comes first. All right, if this is confusing you, you have to go back and watch the video I taught about institutional reference points so you understand how to approach each of them in their order of importance. So when we are looking for institutional reference points between a recently created trading range between the high and the low, we are first of all looking for a mitigation block, then a breaker block. All right, so you need to know how to approach this institutional reference point in their order of importance. So we saw this bearish mitigation block. We knew that this would be the drawn liquidity for the institutions to engineer new liquidity to deliver into the external range. Relative equal low here or equal low, which is the sell side liquidity pool, and we also outline the equal lows here and the tiny fair value gap right here, or you can say the buy side imbalance, sell side inefficiency. This will be the drawn liquidity in the near term. Okay, then we go down to the daily time frame, and on the daily time frame we also outlined that before we see the dollar trade into that level, we like to see the dollar trade into that fair value gap here. You may need to watch the previous weekly commentary because that's where I showed this. I said I had interest in seeing the dollar trade into this level and then it should head for that weekly mitigation block right here. It also has a tiny fair value gap, and if you can, as you can see this, it's also within the premium of this range. high, low, 50%, above 50% is premium. Price is looking like it's finding resistance at the mitigation block. Okay guys, so what are we going to be doing? We would like to see market structure continue to the downside, because we've been seeing price forming lower low, lower highs. You can see that. So we'd like to continue with our structure, lower lows into the higher time frame draw liquidity. So how are we going to approach this market? We will approach this market by going down to the 1 hour time frame and look for a shift of market structure. You can see that shift of market structure. So you can see on the 1 hour, it's already created a shift of market structure. Price formed a higher high, give us a shift of structure to the downside, creating an imbalance or a fair value gap right at the breaker of this price action. Okay, that's a breaker block. Let's mark it properly. Price took out the relative equal highs here, then shift of structure created a fair value gap. We'd like to see the dollar trade into this bearish order block with a fair value gap attached to it right here. You can see that fair value gap. Before I like to see the dollar continue the bearish market structure. However, because this is a new week, the dollar can as well violate this structure and take out previous weekly high. Remember, because there's a liquidity residing above that previous week's high, so the dollar might want to take out the high here before we create another structure to the downside, and we continue seeking sell-side liquidity pools until the higher time frame draw liquidity is traded into. And this looks like a market maker sell model. Right, price has delivered. This consolidation is the ultimate liquidity or draw liquidity, as we can see on the 1 hour time frame here. All right, so on Monday we are going to have more information as the dollar opens, as the market opens on the dollar, especially when we see a gap open lower. It tells us that we should have an interest in a down price delivery during the week. Okay, so we'll just go to the GBPUSD and look for the opposite, try to see how price is going to play out on GBPUSD or any other asset you are trading. So we just go to the GBPUSD as well to do the same thing, looking for institutional order flow of the higher time frame and reframing it to the lower time frame and see where it's best to take a trade. So we go to the weekly time frame. On the weekly time frame, we are simply looking for institutional order flow. So on the weekly time frame, you can see we have had a bullish institutional order flow. Price has been taking out previous week's high on the weekly time frame. All right, however, last week was a retracement into internal range, the bullish order block, and the implied fair value gap. Where is that implied fair value gap? 50% of this candle wick, as you can see here, and 50% of this candle wick. That's an implied fair value gap. So price traded into that level and started to react. We would like to see this guy trade into the next drawn liquidity. So where is the next drawn liquidity? Right here. The next drawn liquidity is this volume imbalance, the old high here, and the volume imbalance that you can see right here on the weekly time frame. You can see they are almost at the same place right on the weekly time frame. That's the drawn liquidity. Okay, so we like to see the daily and the 1 hour time frame to have more insight on where this guy is going to trade into. So this is the daily time frame. Price traded into a bullish breaker on the daily. Where is the bullish breaker? This guy, after taking out the lows here, we had a shift of structure right here. You can see that price just slightly touched the breaker block. Okay guys, so that's a point of interest on the daily time frame. And as well, price also traded into the implied fair value gap attached to that guy. All right, as we outlined on the weekly time frame, that's where price traded into. So if GBPUSD is going to go up, it's going to trade into the buy side liquidity pool residing above this high, this equal highs, and ultimately the drawn liquidity of the weekly time frame. So let's just do this. This is buy side liquidity pool, drawn liquidity right here, and the volume imbalance of the weekly time frame. All right, so we like to see structure continue, higher highs, higher lows. Higher high is what we are targeting. Then on the 1 hour time frame, let's quickly check through what we can see on the 1 hour as well. Just like we saw on the dollar, that's the 1 hour time frame had already formed. It has already given us a shift of structure. So we like to see that also affected on the GBPUSD. So this is the GBPUSD 1 hour time frame, and what we can see here is that price took out the low here, gave us a shift of structure. That expansion looks like smart money reversal, especially because sell side liquidity pool has been taken. Price traded into that implied fair value of the weekly, and as well price traded into the daily breaker block that we outlined. Now we see price giving us a shift of structure. We like to see this guy trade into internal range fair value. Now look at this, guys. There's a tiny fair value gap here. Most people will ignore this, but I would like to see GBPUSD trade into that fair value gap before we start a trade to the upside. Okay, so when the new week opens, I like to see this guy open, then take out the low here, trade into this level as we start to see this guy trade into buy side liquidity pool up here, and ultimately into the weekly, daily and weekly drawn liquidity. So this is my outlook for the dollar and GBPUSD. You can simply try to do the same analysis on the currency pair that you like to trade. Guys, let me know what you think about my analysis in the comment section. Don't forget to like this video, click the subscription button, and turn your notification bell. Until next time, I wish you good luck, good trading, stay safe.